Welcome to Smart Stock Watch. Today is April 17th, 2025, and we're diving into the latest earnings report from D.R. Horton, America's Builder. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. D.R. Horton has just released their fiscal 2025 second quarter earnings, and there's a lot to unpack, from revenue figures to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. D.R. Horton reported consolidated revenues of $7.7 billion for the second quarter, which is a 15% decrease compared to the same quarter last year. John, what are your thoughts on this?
Indeed, the revenue decline is notable, but it's important to highlight that the company still achieved a pre-tax profit margin of 13.8%. Net income was $810.4 million, translating to an adjusted EPS of $2.58. While this is below the forecasted EPS of $2.67, the company has managed to maintain solid profitability despite the revenue drop.
Home building and sales performance. Moving on to home building operations, D.R. Horton reported home sales revenue of $7.2 billion, with 19,276 homes closed. How does this compare to their previous performance?
Home sales revenue decreased by 15% compared to last year, and the number of homes closed also saw a similar decline. However, they reported net sales orders of 22,437 homes, with an order value of $8.4 billion, indicating a strong demand pipeline despite the current market challenges.
Shareholder returns and financial position. Let's discuss shareholder returns. D.R. Horton repurchased 9.7 million shares for $1.3 billion and paid $125.5 million in dividends. What does this say about their financial strategy?
The company is clearly focused on returning value to shareholders. They've also announced a new share repurchase authorization of $5.0 billion, which underscores their confidence in their financial position. With total liquidity of $5.8 billion, they have the flexibility to continue these initiatives.
Market conditions and strategic outlook. John, the company mentioned a slower start to the spring selling season. How is D.R. Horton adapting to these market conditions?
They're responding by increasing sales incentives to drive traffic and sales while maintaining a balance between pace and price. Their home sales gross margin of 21.8% is within their guidance range, and they remain optimistic with a revenue guidance of $33.3 billion to $34.8 billion for the fiscal year.
Key takeaways. In summary, D.R. Horton has faced some challenges this quarter with a decrease in revenue and earnings, but they continue to show resilience through strategic initiatives and shareholder returns. John, any final thoughts on their investment prospects?
Despite the short-term headwinds, D.R. Horton's strong liquidity and strategic focus on shareholder value make it a compelling long-term investment. Their ability to adapt to market conditions will be crucial moving forward.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on D.R. Horton's performance in the comments below.